Dividend investing is a powerful way to build wealth over the long term, but you don't have to stock pick to do it. Dividend ETFs bundle together dozens or hundreds of dividend-paying stocks, giving you instant diversification and steady cash flow. Today, I've picked 3 outstanding dividend ETFs that long-term investors should know about. Each has a slightly different focus, so you can choose what matches your style, or even combine them. Let's dive in. 1. Schwab US Dividend Equity ETF, SCHD, the all-rounder. You've heard us praise SCHD before, and for good reason. This ETF offers a blend of high current yield, dividend growth, and quality. It holds 100 US stocks screened for strong fundamentals and consistent dividend payouts. The result? A portfolio yielding roughly 3.9% at present, which is higher than most dividend funds, and those dividends tend to increase nicely over time. CHD's top holdings are a who's who of reliable dividend payers. Think PepsiCo, Merck, Home Depot, Coca-Cola, Verizon, etc. It's well diversified across sectors, but with a value tilt. More in financials, industrials, consumer staples, less in high-flying tech. SCHD has a rock-bottom expense ratio, 0.06%, and a stellar track record, about 11% annual total returns over the past decade. It even outpaced its competition, like Vanguard's VYM, in total return over 5 and 10-year periods. For long-term investors wanting a core dividend fund, SCHD is often the first choice because it balances yield and growth. Plus, it's from Schwab, so there are no commissions on many brokerage platforms. 2. Vanguard Dividend Appreciation ETF, VG, the dividend growth champ. If your focus is on quality and growth of dividends rather than highest yield, VIG is a fantastic option. This ETF holds companies with at least 10 consecutive years of dividend increases, essentially the proven growers. It eschews ultra-high yielders and instead owns names that steadily raise their payouts year after year. You'll see a lot of high-quality blue-chip growth companies in VIG. Microsoft, Apple, yes, even Apple now has 11+ years of dividend growth, Johnson & Johnson, Visa, United Health, etc. These tend to have lower yields but fast-rising dividends. Don't expect big income up front. VIG's yield is around 1.7% currently, but those payouts compound over time. In exchange, VIG has delivered strong total returns, roughly on par with the S&P 500 historically, and tends to hold up well in market downturns because of its focus on resilient businesses. It's also huge, $90+ billion in assets, and ultra-cheap, 0.06% expense ratio, like SCHD. Long-term investors who prioritize dividend growth and quality love VIG. It's the kind of fund you buy and let run for decades, letting those dividend hikes, hopefully, snowball into serious income by retirement. 3. Vanguard High Dividend Yield ETF, VYM, the broad high-yield play. Rounding out our list, VYM is a great choice for those who want diversification and current income. This ETF tracks an index of U.S. stocks with above-average dividend yields, holding about 400 of them, without additional qualitative screens. It's essentially the basket of high yielders across the market. That means you get lots of exposure to sectors like financials, healthcare, energy, and consumer staples. Top holdings include names like JP Morgan Chase, ExxonMobil, Johnson & Johnson, Procter & Gamble, and many that overlap with SCHD, actually. The key difference: VYM is broader and doesn't filter stocks out by cash flow or long histories. It's more of a pure yield approach. Right now, VYM yields about 2.6%. Its yield has been a bit lower than SCHD's lately because it includes some lower yield, higher growth names too, due to market cap weighting. Over the long term, VYM's performance has been solid, roughly 9–10% annual returns over the past decade, slightly trailing SCHD's more curated list, but not by much. Many investors use VYM as a core income holding because it's extremely well diversified. No single stock is too large a piece of the pie, and its simplicity at its finest. Like the others, it's low cost, 0.06% fee. If you want a one-and-done fund for dividend income and you favor a very broad approach, VYM is a top contender. Honorable mention: there are a few other great dividend ETFs out there depending on your needs. For example, DGRO, eShares Core Dividend Growth, which is similar to a blend of VIG and VIM, or Noble, ProShares Dividend Aristocrats, which focuses on S&P 500 companies that have increased dividends for 25+ years. But in the interest of time, our top 3 cover a broad spectrum and are among the most popular for good reason. Outro, so there you have it. 3 excellent dividend ETFs for long-term investors: SCHD, VIG, and VWEM. You really can't go too wrong with any of these, or even using them together. They offer a combination of yield, growth, and diversification that can form the backbone of a dividend portfolio. Which ETF is your favorite? And are there others you think should have made the list? Drop a comment and let us know. If you found this video helpful, please give it a thumbs up and subscribe for more investing top picks and tips. Here's to a future of growing dividends. Thanks for watching.